Welcome back. I'm Charles Lewis, the Austin area realtor who brings you topics and discussions that will help you make better decisions when you buy, sell, or invest in real estate. Today, I'm with my friend and fellow Keller Williams agent, Chris Gunn. Chris, thanks for being with us today.
Charles, pleasure to be here. I'm really looking forward to this.
Well, Chris, you may not realize this, but there are actually people out there who may not even know who you are or all that you've been able to accomplish in a short period of time. Since we're going to be talking about real estate investing, let's take just a little bit of time just so people understand that you are qualified to talk about this topic. Tell us a little, how long have you been involved in real estate? Let's start with that.
Yeah, so Charles, I got into real estate fresh out of college.
Okay.
Texas State University, go Bobcats, and got involved in 2009.
09. Mm-hmm. And were you able to start with the investing right off the bat, or did it take you a while to establish your business and move into investing?
Great question. So starting off, you don't have any money. I didn't have a book of business here. Didn't know what I was doing. Still had a Houston area code 281. So it took me a little bit to build the reserves, but that was always the goal, was to first find a place that I could live in and then hopefully build a portfolio from there.
How long before you purchased your first investment property?
2011.
So 2011 until now.
Yeah.
Now we're up to 20. So we're looking a little over 10 years.
Yeah.
So in that 10-year time frame, help us understand how many doors you've been able to purchase.
Yeah. So as of right now, have 20 doors and my primary residence.
So in a 10-year period, you've been able to purchase 20 rental property, or 20 doors. I mean, because I think some of your holdings are duplexes, right?
Correct, multifamily. So, 20 doors in about 10, 11 years.
Just so people kind of understand what that represents, would it be accurate to say that $2,000 average rent in Austin, 20 doors, you've been able to establish a stream of income that's probably exceeds what most people make going to work every day?
Yeah, so as of right now, with today's current rental rates at each door, the portfolio brings in a little over $33,000 a month.
So $33,000 gross income.
That's before everything's paid, but rents, $33,000.
The other piece of it is your timing, is that you were just after the last downturn. And of course, just prior to, well, of course, I don't know if you bought in the last couple of years, but just prior to the big run-ups.
Correct.
And would it be safe to assume that the value of your overall holdings have at least doubled in the last 5 years or so?
Yeah, so basically, if I look at all the purchase prices to compare to what they are current market value,
okay,
they've gone up about $3 million.
So about $3 million.
It's very close to double.
So in a relatively short period of time, 5 to 10 year period,
Yep,
when 10
10-year
years you start
period.
buying,
Yeah.
you've been able to increase, or not, you haven't been able to do it, it just happened,
I haven't done
right?
anything. Yeah, that's a beautiful thing about real estate.
Okay, well, thank you so much for taking the time to kind of explain what it is that you've done.
Yeah.
Because my purpose in doing that is anybody out there watching this understands that you are qualified.
Thank you.
To address questions regarding
So
it's not like you've read it in a book and you think it works.
No. It's real life. Made mistakes, done some positive things, but I was very aggressive at a younger age, and that's going to pay off well.
Okay. Well, here's what I'd like to do today. Now, understand that I'm no way hoping or even remotely suggesting that it would happen, but let's say that you had to, for whatever reason, had to start all over. But you got to keep all of your experience and knowledge that you've gained over these last 10 years.
Yeah.
We're talking about the current market, where again, we've seen prices run up, interest rates are going up, prices are beginning to kind of adjust.
Yeah.
I mean, from your perspective, where would you start? What would be your moves? Number one, do you feel that Austin is a good investment market?
Absolutely. So sort of when looking at a market, I think you want major healthcare.
Okay.
You want higher education and jobs. Okay. So take a look at Austin. We've got all the major players. We've got Baylor, Scott and White, Seton, St. David's. Then as far as higher education, we've got the University of Texas, one of the biggest colleges in the nation. And then jobs. I mean, all you hear is jobs coming here. So even though the prices have gone up, it's not scaring employers. You've got the major players, your Teslas, your Googles, your Amazons, they're all coming here.
So your estimate is that even though that we've seen pretty significant increase with respect, well, in comparison to other parts of Texas, is that your prospects for future growth is strong?
Absolutely. I think Austin, what it's going to be is you're not going to compare it to other Texas towns. I think you're going to compare it to coastal towns. It's going to be a Seattle, a San Diego, something like that.
I understand. Okay. Okay, so again, from your perspective, I mean, seeing the growth that's happened already and moving forward, where would you suggest somebody look? I mean, is it in the city? Is it the outlying suburbs? Or, I mean, where are the opportunities?
Well, the opportunities, it'll come from what's your strategy. What do you want to do?
Okay.
Is your investment strategy buy and flip? Is it buy and hold for 3 to 5 years and sell? Is it just buy and hold, pay it off, and just never sell it? My strategy was always to buy and hold. Don't want to sell. I want to hold it, have someone pay it down while I'm cash flowing. It's appreciating. It gets paid off, and then that can be passed along to my family, my son.
Okay.
So with that strategy, I'm not as worried about the appreciation and what I could sell it for. It's the rental rates. And the thing with Austin that's beautiful is that it has gotten so expensive that a lot of people, they just can't afford to purchase here. They probably never will. I think it's priced out a lot of people that are blue collar workers and that are in the service industry. So there's going to be a need for that product, and that's what my thought was.
We're not talking about you had the opportunity to buy it 10 years ago. You're buying at today's market value.
Yeah.
And you compare that purchase price to your anticipated rent, even though that rent has gone up, I don't think such thing as that 1% rental factor exists. I mean, you're typically purchasing something closer like 4.5, and in order to get it to cash flow, you may need to put more money into it.
Yeah.
Was that fair?
Correct. The cash flow, it's more difficult in Austin now.
Right.
The appreciation factor's there. But it's the old saying, it's, time is your friend. So, if you don't have the capital to get into the Austin market, which it is competitive, it's expensive. If you're thinking if you're doing a single family investment, that's 20% down. If you're doing multi, it's 25% minimum. You're looking at 100 to get in the game.
Just to right.
Yeah, so if you don't have that, there's other opportunities. Waco's been exploding. I think what you look for is job growth in certain areas. Again, where they're bringing in jobs, they're leasing office spaces, creating factories. There is an education there. They've got the infrastructure with the major medical. I think you look at areas like that, and you can find some things that the entry level is a lot lower.
If I'm not mistaken, several of your holdings are multifamily, duplexes, tries.
So basically the portfolio consists of 7 duplexes,
Okay.
1 fourplex, a single family home, and a short-term rental.
What's being proposed is you got to start again, right?
Yeah.
You're starting in today's market. Would you look at, or would you recommend someone look at, say, the multifamily versus the single family? Does that provide additional opportunities that maybe someone's not thinking about?
That's a good question. I mean, if I had to, knowing what I know now, what I would do, I would get into multifamily without a doubt.
Okay.
Just over the single family. It's just common sense that you have 2 doors or 4 doors or 8 doors under one roof.
Gotcha. Okay.
So it can offset a vacancy. If you have a single family home, you got a vacancy, you got nothing coming in. That's tough. If you have, say, for example, a duplex, you got one side. You'll always have it where one side's rented out. You'll stagger the leases. You'll always have money coming in when you do have a vacancy on the other side, and that really helps out.
Well, that's a good point. Thanks for sharing that. It's something. What about availability? I mean, have you seen it become more difficult to acquire?
Oh yeah,
duplexes. I mean,
because that's where the money is. I mean, if you're crunching the numbers, the cash on cash return, you're going to find a much better return on multifamily. So
Gotcha.
That's what most educated investors are looking for.
I got you. I understand. Okay. Well, appreciate you saying that. Again, that's directly from experience. So how about this one? Is that if someone were to consider growth potential, certainly Austin has demonstrated growth. I mean, areas of Austin that are close to the tech centers, like I'm talking about like the 183 corridor along Cedar Park, Leander, and of course out the other way with the Tesla impact on the east, right? Your Manor, Elgin, even up into Hutto, right? What is your, and again, this is just kind of like a personal opinion, right? Nobody's holding you to it.
Yeah.
But where do you see the growth coming? I mean, do you see maybe favor one area over another, or do you see a greater chance of return, or?
I think they're really good options, because if you look at that southeast outside of Austin towards Bastrop, your Manor, Tesla, that's a big deal.
Yeah.
Then there's land that can be developed out there, and it's a lot of stuff's pushing it there. Plus, I got a Buc-ee's out there. That's really cool. Yeah. But then your Leander, Cedar Park, Liberty Hill. I mean, if you drive down 183, they've got everything you need. The infrastructure's there. They got all the amenities. I mean, it is a fantastic spot to live. I see it there too. North, obviously, you've got the Domain. You've got it's basically the tech hub up there.
Right.
I mean, you've got really, really great options. So it sort of depends on what you're looking for, but I wouldn't steer anyone clear of either 3 of those.
And of course, too, I mean, we didn't even talk about South, not to ignore it, right? But you've also got like the Butte Kyles along.
And then you've got San Marcos, which I mean, I think they have over 40,000 kids at Texas State. So again, you know, I like to look for jobs, higher education, and major healthcare.
Chris, actually, one thing I thought about is you started in this relatively young. You said you just got out of college.
Yeah.
You got into real estate, and literally, what, two and a half years after you get started?
Yeah, about 2.5 years.
You're buying.
So basically, what I was experiencing was Austin's really starting to take off then. Okay. So I had an apartment, and the rents were just going through the roof. Okay. Finally got my feet wet in Austin, so I wanted to buy a duplex where it was pretty simple. I was 25 at the time. Okay. Buy a duplex. I live in one half. Rent the other side out to a friend, colleague, someone like that. Put it on a 15-year note, so it's paid off when I'm 40. If I don't make any other payments, and that's just a nice nest egg. You know, I have that, and we could sort of go from there. So what I did was purchase it, moved in one side, moved in a buddy on the other side that I knew from the gym, and basically with that 15-year payment, he covered about 3/4 of the mortgage payment. Wow. So I was able to live on one side basically almost free, save a lot of money, and it put me in a cash position to buy the next property in 2 years.
Gotcha.
So, I mean, it's the age-old saying, if you can buy a property a year, you're doing a good thing. So I think first you need to buy one where you can live in it. Again, it's not your forever home. It's strictly an investment. Either if it's a single family, move-in buddies that can rent doors where they're covering your mortgage payment, so you can save and get ready for that second one. So maybe it's not something that you're in love with personally to live in, right, but it'll set you up for success down the road.
Appreciate you sharing that, because I know there's a lot of people out there that are like you were, you know, 10 to 12, 15 years ago. It's like they're just starting out trying to figure out how to get started. So I appreciate you sharing that.
Yeah.
Listen, I really appreciate you coming by today. Before we wrap up, do you have any other thoughts or anything else you might want to share?
You know, I would say a lot of people, they can just really get paralysis by overanalysis, crunching all these numbers, reading all these books, listening to these podcasts. Invest in an area you know, an area that you believe in, and time will be your friend, and it will pay off.
So Chris, thanks again for stopping by. I know I've found it useful, and I'm sure a lot of people out here have too. If you'd like to talk to either one of us directly, our contact information is in the video description. If you have any suggestions on how we might improve these videos or topics you might want to see us cover, please don't hesitate to let us know. Shoot us an email, put it in the comments below. Thank you for watching, and let's make your real estate dreams come true.